And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Monday, so you're going to get your Brooklyn Weekly Market Update, John. Let's get right to it. I'm looking at supply, 3,509 things. Not much going on. Show me that chart, Johnny.
Not much is going on, right? We're down by one listing, I suppose, from last week. We're down 16% from the week from last year, and we're down roughly 30% from the 2020 line. And Noah, this is really what's kind of supporting this Brooklyn market here. Is this supply has been extremely underwhelming.
Yeah, exactly. Supporting the market, muting the depth of the correction. I mean, you think buyer's market, even though Brooklyn did not really hit the buyer's market, you think supply is going to explode, and that is not happening. Let's shift over to Brooklyn demand. Pending sales, 1,960 listings waiting to close. Johnny, show me that chart.
Yeah, we're still firmly in reset mode here. We're down another 1.5%. From last week. We've now crossed down back below that 2020 line. And Noah, if you were just looking at this chart, you would simply think, all right, well, the Brooklyn pending sales have kind of fallen to a point where we could necessarily see a buyer's market. But again, with that supply coming in so low, supporting the market, that's not what we're seeing right now.
Yeah, and that supply is part of that equation. And that's why you take supply and you add in pending sales, you get the market pulse, and it looks something like this. And you could see that it did not quite make it to official buyer's market territory. It certainly did not do what it did back in the pandemic when it was a clear buyer's market. Instead, the only real buyer's market was really the shift from the sell side right up here, this whole zone that you were in for a long period of time, and now you're just at this new lower level. And that shift is really the only leverage that buyers picked up over the course of this last 7 or 8 months, Johnny.
Exactly.
Let's move over to the weeklies in Brooklyn. Let's take a look what's going on there. I'm looking at supply. That is 1 month. I do not want 1 month. I want 1 week. 197 ticking higher. Johnny, show me that chart.
Yeah, it's ticking higher. And, we're dealing with smaller numbers, so we have bigger percentage changes. So that's up 9.5% on the week before. But I mean, Noah, the trend is still in place, right? You have that post-Labor Day bump up in supply, and then the general trend is down, and that trend remains in place. And if you'll notice, this year's lines on the weekly level are basically behind every year. The last couple of years we've been tracking this. So, supply on that trend is in place, and it's just a much lower trend than usual.
Yeah, I mean, it's not uncommon for sellers not to want to rush to list their property when they don't think they're going to get the bid that they're going to accept. That's just part of this market. Let's shift over to Brooklyn demand. 1 week, Johnny, 142 things, a nice little pop. Show me that chart.
Yeah, and honestly, the contract signed on the weekly level are telling pretty much the same story as the supply did, right? So we're up, I suppose a little bit on the week, right? 18 or so percent. But, again, compared to where we were 2020, 2021, right, we're down. So everything is down. So even though these things are sort of doing what they do on a normal trend, they're just down from prior years. So they're down in balance, right? And that's kind of the sense that we're getting. So even though everything's down, it's sort of down in a balanced fashion.
Yeah, that's a really good point, John. I mean, we are seeing a recovery. We are seeing a pickup in deal volume. But when you look at where we're supposed to be for this time of year, we are down. And that's the whole point, is that we spent the recovery being above trend, if you had a historical trend line for this, and now we're starting to spend this shift period below trend. And that's the question really, is where do we go? Do we stay in this level of lower liquidity for the next 3-6 months? And that's the question. Let's shift over, Johnny, to the chart du jour, because I like what we got going on over here. We're looking at price cuts. We're looking at the number of price cuts. We're looking at the percentage of the price cuts. When we do it all, it's a median, and we put that data in one big bucket. And this is Brooklyn apartments. So this is co-ops and condos. We wanted to separate townhouses. And, I look at this chart. I mean, let's just flat out say, what are sellers doing? I mean, they're cutting what? Just about 4%?
Right.
Okay, so that's that, right? I mean, in and of itself, it's not that much. And I look at the blue. I'm looking at the blue lines. You would expect, with a panicked market, this blue bar to really shift higher. And it's not. It's not. It's just kind of pointing out to me how strong late 21 and early 22 was before the shift. And to me, it just looks like sellers are just doing their thing without some kind of a mass panic going on.
Yeah, and I completely agree. We're going to see the same thing in the townhouse one, and I think this all comes back to supply. I mean, if you think about where we were in 2020, if we had that level of supply from 2020, 2021, I think you'd see, you know, higher rows and, you know, higher line charts, higher columns here as the number of price cuts and the intensity of them increase. But right now,
Yeah.
there's just not that panic among sellers, either in a townhouse setting like as we're looking at right now, or the apartments. I mean, look at townhouses. I mean,
Yeah.
they're essentially, the number of them has been very, very steady, except for, you know, looks like December of 2021. Okay, really, it was quiet, right? So, but it
Yeah.
seems like this is a very stable number, and the percentage, I mean, we're oscillating between 3.5% at the low, maybe 4.5% at the high. I mean, this is a very narrow channel. This is
Yeah.
not a panic channel here, Noah.
Yeah, and I think that's what's frustrating buyers is, again, they look at what's going on in the macro world and the economy with interest rates, and of course this is all playing a very, very big role in this cycle, and it will for the next few quarters. But I don't think they're seeing what they think they should see, and the ones that are transacting are going to where the market is, and this is where the market is, unless the next couple of months is going to reveal something brand new. I don't know. And, you know, let's just change for a second. You know, Mark Chin, hat tip Mark Chin. And I'm looking, I believe he's at the Rubin team right now in Element. And I'm looking at this chart, which he conceived of. And this is taking the ratio of price reductions, okay? The ratio of price cuts, number of price cuts to the number of contracts signed.
Right.
So like if the market's shifting lower, right, price cuts should go up and contract signed should go down, and this number would rise. Right. And this number would rise. So this rises when the market shifts kind of lower, and this falls when the market's better. And I think his thesis, Johnny, if you can correct me, was that if you get over this one level, and you're starting to get into some buy side leverage territory, versus below that, and you're in the sell side leverage territory, Johnny.
Right. So when you're below that one, right, you basically have fewer price cuts than contract signs. And the idea is that most contracts are just not reducing their price. They're going at, or, you know, they're moving without having to even touch the price. But what I see here, Noah, is I zoom out and you're looking at this. I mean, it just, yeah, we're kind of a 1.5. It's just, there's a little bit of, you know, buyers have a little bit of a push, right? A little bit more negotiation room than they had 6 months ago, back in January, or 8 months ago. But it's still, it's taking a little bit of extra effort, but it's not, I just simply don't see the panic yet here.
Yeah, and we don't have 2020 to compare that to because we don't have the listing data. So, I mean, you know, that's why I was a little messed up here. We stopped it here to be consistent. But yeah, I think buyers have leverage, and it's a relative shift. You were here, and now you're here. And again, if there's price action that we are down more right now, let's just be very clear to the audience here. There is a 1 to 2 quarter lag, closer to 2 quarter lag between deals signed yesterday and when we're going to get them, and it's going to close, and we're going to see the public records. So that if this market did undergo a shift in the last 3 to 6 months, then it's very possible the data is not fully showing that yet. And we are showing you what we have as we get it in real time. And we're aware of it. We're aware of it. So that's why we're talking about what's going on. And when we start to see it, we'll report on it. Right. Okay. John Walkup, thank you very much for pulling up all this data. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you guys got questions. We got answers. Please visit our forum right over here. If you want any of the Brooklyn reports that John whipped up today, it's going to be right over here in just a few moments. Other than that, this has been your Brooklyn Weekly Market Update, and we'll catch you next time.